Right. Time for another stock review. This time we are talking Flux Power, and this was requested by one of our members. We are going to look at deep dive at Flux Power. We're going to look at the balance sheet, the profitability score, the solvency score. We're going to see who is buying on the inside, who is selling on the inside. We're going to see the short position. We're also going to share with you a look at the website. We're going to look at the latest news, and we're also going to look at a back test. This is ordered by one of our members. I can do this free. It's what I do to help my members. It's not financial advice. It's just my experience of looking at the numbers. We use the most advanced algorithmic software. It's not biased in any way. No one pays me to make these reviews. No one sponsors me to make these reviews. They're just numbers, facts, thereby giving you the most honest review possible. And then you can make an informed decision whether that this stock is right for you. I consistently beat Warren Buffett, consistently beat the markets. I'm here to help people, not to sell videos, not to get you to subscribe. I go live every day. In fact, I'm making this video during a live event. So members now can comment and be part of this video. As you may see, some live events happen during the making of this video. Anyway, let me get straight into it. So we've got a lot to cover in our latest review. So here we go. If it's your first time here, click subscribe and ring the bell. And as always, tap the like button and give me a like. It shares the video out to more people, and more people can get to learn about this company. All right, what is Flux Power? Oh, hello.
You need to take another look at FSR, Fisker, its latest news.
Okay, Lance Strength, one of our members, has just done a super chat to take his review to the top of the list. It will be done next. All members can have a review done for free. If you want to boost it up the list, you do a super chat and it goes up to the list, up to the top. So Lance Strength, Fisker will be next. Thank you very much indeed. As I say, this is made during a live video. All right, we start nice and basic, but we are going to get deeper into the stock as we go. What is Flux Power? Let's look first at what the basic line chart, just to get an indication of where the stock is. It IPO'd here in 2020, as you can see, August 14th, did what typical IPOs do, fall off, but then it rose very quickly. It rose all the way to 1875 and it's fallen down, and now we are here at $4.32. We are now a penny stock, under $5, of course. We are a penny stock. What is Flux Power? It engages in the design, development, and scale of rechargeable lithium-ion energy storage systems for industrial applications. It focuses on electric forklifts, and airport ground support equipment. Okay, let's see some more. The company was founded by Christopher L. Anthony. Now, I do meet the CEO series. I will reach out to Christopher on my X and Instagram account, so please get in touch with me. I'd love to interview you and talk about you on the show and learn the mind behind the man at the top. So you are very welcome on my show to reply to this review. September the 21st, 1998. So it's been around a while and is headquartered in Vista, California. The listed name for Flux is Flux Power Holdings. Okay. Founded in 1998. So it's been around a little while, 25 years or so. So it's not brand new. But anyway, California, 133 employees, and Ronald F. Dutt is the CEO. Okay, market cap, 68 million is the market cap. The high today is 424. The 52-week high is $7.50. Negative price to earnings ratio. What is that? Well, when we're going to value a stock, we have to look at the price we're paying compared to the earnings. That's the ratio. It's negative, which means it's losing money, but you might go, well, that sounds cheap then. Well, not necessarily. You need to compare it to the competition, and we'll give you the competition in a few moments. We're going to give you the links of all the competition and you can compare. There is no dividend. This is purely a growth stock at the moment. The difference between a dividend stock and a growth stock, of course, is a dividend stock may pay you a passive income but it may have a sideward growth action, whereas a growth stock is designed, as it says on the tin, to grow, and maybe a dividend would come in later years when the stock has stabilized, it's come off its S-curve, and now to encourage the investors to stay in. That's essentially what it's for, and it pays you a passive income. But right now, it's a growth company. Average volume, 45,000. So low volume, 20,000 today, which is about average for 9:31 Central Time. Low volume, we demonstrated what volume does of a stock. You can lose very quickly on the stock with low volume because no one's prepared to pay the price that you want to sell your stock for. So just be wary of that. A low volume stock means you can get stuck in the stock and have to sell at a lower price than perhaps you wish to do so. All right, the earnings, as you can see here, a new company like this, as always, analysts are rubbish at it. Wall Street analysts, they're either paid and they're influenced and they're influencing the stock, or they have no idea. They're just traders at Wall Street, don't look at the future, just want to get in and out today and whatever. They are not very good at analyzing this stock. As you can see, they've missed the actual numbers consistently here. The company have beaten the analysts' expectations, which is great, but that doesn't mean to say it's now great because they've beaten earnings. It just means that Wall Street undervalued the company. That's what it means. The company didn't set the expectations. That would have been a much better achievement. Wall Street did, but it doesn't always mean a stock's going to pop up just because it beats on earnings. It's worth noting that as well. And if it misses on earnings, doesn't mean to say it's going to go down either. Very often it can go the other way around. It's a very complicated world we live in. Right, who buys the stock? This is a nice little way of looking at it. This tells you who is buying the stock, and then you get an indication of how it will trade. Plug Power, great company. However, people don't like the CEO. We reported an earnings once when people thought he was having a few beers on the earnings. Good business, a lot of debt though, but he doesn't seem to think it's a problem. I like Plug Power. I live with the fact that the CEO is a bit unpredictable. NEO, I wouldn't touch Chinese stocks. I don't like it. Too much manipulation. There's enough manipulation in the US. Go to China and it goes into a whole new level. So I wouldn't touch that, but it gives you an indication of the way the stock will trade. Workhorse, I don't know enough about. I've not done a review on it. Palantir Technologies, I like it, but because it's futuristic and it's new and it's got a rock and roll style of CEO, of course, it can very easily get overbought, and it is overbought. It's too expensive. It's a bit like the early years of Tesla. Our CEO, Karp, is a little bit excited, and his hairstyle, and everybody gets a little bit like, this is the future, and it is, but it's overbought. So the stock can be volatile. Fuel Cell, again, penny stock. Charge Point, penny stock. You're getting stocks here that are very volatile, which means this stock is owned by those that like to gamble a little bit. So that's worth noting. All right, before we go into the heavy numbers, let's have a look at the website. Let's learn a bit more about the company. Here we go. Change the way you power your equipment. Okay, powering your transition to a sustainable lithium-ion battery technology. Let's read it in here. This is one of their customers, Delta. Let's have a look here. Ground support equipment at Delta's hubs in Salt Lake City and Boston are nearly entirely powered with electricity. A huge step forward, the airline's aspirational goal of 100% net zero ground operation and around the world. We're grateful to our airport partners for their collaboration and support. There we go. That's Delta Airlines giving you a quote there. Why Flux Power? A premier partner supporting your sustainability goals, design and manufacturing expertise, dedicated support, advanced telematics for intelligent fleet management, serving the large fleets of the future 500. We have approximately 19,000 batteries deployed throughout North America and offered the first UL-listed lithium-ion battery pack for material handling equipment. Our strong relationships with OEMs and years of experience provide confidence to Fortune 500 fleets. Okay, there's a bit about the company. All right, Flux Power is leading lithium adoption. All right, let's get some latest news from the company before we go into the heavy numbers. Flux Power to attend benchmark 12th annual Discovery one-on-one conference on December the 7th, 23. That's just happened, of course. And let's have a look. Flux Power Chief Executive Officer Don Dutt and Chief Financial Officer Chuck Shiwi, I think that is, I apologize, will conduct in-person one-on-one meetings during the conference. Let me just zip in a bit closer for you. One-on-one meetings during the conference to discuss ongoing product and market expansion initiatives and recently developed fiscal first quarter 2024 financial results with gross profit up 9% to 4.3 million, gross margin of 29%, and order backlog of 31.1 million as of November 2nd, 2023. Okay, what else we got? December the 7th. What else have we got? Anything newer? December the 7th. For more information about Flux, forward-looking statements. Okay, we don't need any of that. Let's get straight over now to the numbers, which is why you're here, which is what you want to see. Let's get straight into the valuation. Here we go. Okay, now then. First thing we need to do is look at the intrinsic value. Now, the intrinsic value on its own is not enough. This is not enough to tell us that this is a great company. We need to look at a lot more, and we'll cover that in a moment. Best case scenario. We're not in a best case scenario. We still have external macro conditions, wars, inflation. Inflation has peaked. It's coming down. Interest rates are likely to come down. However, things aren't in a perfect world. Base case scenario, 64% undervalued. Okay. Worst case scenario, 55% undervalued. So on the basis of this, you'd go, okay, I'm going to buy it. How do we get to the intrinsic value? What is the intrinsic value? Well, we use algorithmic software, which just looks at the balance sheet, the numbers, the margins, the loans, the debts, comes to these valuations of what the company is based upon different metrics. And it's not based upon people's opinions or people are paid to say whatever they want. It's just the numbers. However, that can be misleading, so we need to look to see if we've got any warnings on the intrinsic value, because we can have a valuation trap. It can be misleading. However, it's not enough in itself to buy the stock. Let's look further in. There are no traps. There are no warnings. So it looks pretty reliable. Looks pretty reliable. 4.23 is the price it was when it opened this morning. Intrinsic value is looking good. The DCF value is good. Relative value is good. All looking good so far. All looking good so far. Let's carry on. Valuation history. It's a good valuation now. It's been slightly better in 22. There was a better time than it is now, but nevertheless, still good. Now, you can get much more information. I'll give you the link to this in a moment, where you can go and look into these numbers in more detail for free using the software that I'm using here for free. However, if you want to use the pro version and get a lot more information and access every stock on the stock market, you can, and you'll get a lifetime discount. With my members get the cheapest price, and you'll end up getting my membership for free if you wish to buy the full version of this, which is what I use. Okay. And they don't pay me to do this. They don't pay me to make reviews. I do it because I believe it's the best way for me to invest myself. Let's look at the fundamentals now. The fundamental analysis, all right? The financials. First of all, let's look at the revenue. Revenue is increasing. In the most recent range, we did just dip though. September 29, we did dip a little bit, but the expectations are a massive S-curve style of growth there. So the most recent range, we dropped off 5%. We'll find out in a minute. Perhaps it's to do with capital investment. We'll come on to that in a second. Operating income expected to improve, and is improving, up 2% on the most recent range. So far, looking good. It's a sector I like. Looking good. I like it. Perhaps we should buy this one. All right. Net income. So far, it's a buy from me. Net income moving up 0.3, expected to increase. Free cash flow down 51% on the most recent range. Why? because we've been heavily spending in capital investment. It has reduced slightly on the last period, negative to the positive of 17%, but we haven't been investing. That's why our cash flow is down. Anyway, operating cash flow, negative is minus 70% as well. We're spending a lot of money here at the moment. All right, let's go down into the balance sheet. Look at the balance sheet of the company, the health check of the company. We've got 36 million in assets. It's a very small company. 29 million in liabilities. A little bit tight there with the liabilities. Let's hope they don't have too much long-term debt, which will spoil the party, because so far things are looking quite good. I only buy if everything ticks all the boxes. All right, let's have a look. Do we hold any cash? Only 1 million in cash. Only 1 million in cash at the moment out of 36 million. So where does the money come from? The shareholders, dilution, potentially, if we've got debt. Let's have a look. Liabilities. Short-term debt, 12 million. Long-term debt, 230,000. Thank God for that. I was just about to say we're going to ruin the party with too much long-term debt. No, short-term debt is fine, but remember, short-term debt can become long-term debt. 12 million, it's half, or thereabouts, nearly half of their liabilities. Short-term debt, because it's a relatively new company, that could turn into long-term debt. However, with interest rates coming down, that could be a catalyst to drive the stock up if we do well on paying that back down. So, an okay balance sheet. I would have liked to have seen it a bit better than that, but we do have some short-term debt. Again, it's a bit deceiving because it's a new company. It might be long-term debt soon. Who knows? But liabilities are a bit close to in percentage terms, to their assets, and we've only got 1 million. We might need to dilute. We might need to raise funds. I don't know. Okay, let's have a look down. The margins. Now, this is interesting. Their gross margins have dramatically improved from where they were a few years ago. So their investments have paid off. They're making profit on their products, all right? Their margins are good. Now, before we get too carried away and go, they're improving, and a tech company like this should have high margins, we have to compare to the competition, others that do a similar business, and we can do that and identify that in a moment. So the margins are looking good. Operating margin negative at the moment, but improving. All the margins are improving. Okay, now then, profitability score 41. Exceptional 3-year growth, exceptional 3-year revenue growth, ROIC increasing, and exceptional revenue growth 41% out of 100. Okay, not too bad. We like this. However, solvency score, positive net debt, big cross. We don't like that. Average DE, short-term solvency, long-term solvency, 22%. Now, that's red. It's low score. However, for a new company that's investing, it's not the end of the end of the story. However, it should be worth noting the company can go bust. If that short-term debt turns into long-term debt, then the solvency score is going to drop. But we have got rates coming down. We have got potential growth here, but they've only got 1 million in cash. So can they return a profit soon? Can they reduce that debt? Can they bring it down? Rates are going to come down, which will help. So the solvency score will go up when if the rates come down, and we expect them to do so. This could be an opportunity to buy a stock that's down because of this. Let's make sure that we don't have too much short interest on the stock. So there we go. That's looking a bit of a concern, but will the short term turn into long term, and do we have short interest? Let's continue. And do we have any insiders buying the stock? Wall Street, who I don't particularly, think do a great job. Flux, highest forecast, 296% increase. That's very good, but we're not in the perfect world. 190 on the upside for an average, and 128 on the low side. So from a valuation point of view, a growth point of view, good. The only thing is they're not funded. They don't have enough cash, running out of cash, perhaps, might need to dilute, perhaps. Can they make money quickly? Can they reduce those debts? They're the questions you have to ask yourself, and then compare the margins to the competition. Now, I said I would give you the links. This is the competition, and you can go and look at them and see what their margins are and see if they have better margins and better balance sheets before you jump on in. Okay, I'll give you the link at the end. Ownership. Now then, all we've seen here is selling from the inside. But is it significant? During the last 12 months, Flux insiders bought $27,000 worth of stock, hardly anything, but sold $916,000, nearly $1 million. That's significant for this size of company. The last transaction was on November the 2nd, just recently. The CFO, who sold $2,100 worth of shares. So let's be absolutely clear. What he sold last month is nothing. That's probably a tax position, trimming off, doesn't even know he's doing it, automated. I wouldn't be concerned about that. Because people want to look at and see when people are buying into a company. However, as investors, we want to buy in before the insiders buy. Because if they're all buying in, the stock could have already rallied. Well, they haven't bought in yet. There's been negative selling, nothing of significance of buying in yet. So it's not always a bad picture. You need to understand the full complexity of it. Anyway, this is the interesting point with everything I just said. The short interest, 1%. So there is some short interest, but it's extremely low. No one's short in the stock. 1% is near nothing. Give you an idea, Apple is 0.7 or something like that. Great company, still gets a little bit of short interest. Short squeeze comes when it's a minimum of 20% with high volume. This has neither. Doesn't have 20% short interest, doesn't have high volume either. So no short interest. You're not going to get any real negative pressure here, which is good. You're also not going to get any explosive any short squeezes anytime soon either. Okay, there is no further news. Very little information. We don't have anybody else reviewing it, talking about it. That's good and bad. It's undiscovered right now, maybe potentially. So, what do you think? Now, I need to look at the backtest. If we're going to buy this stock, we have to compare it to something else. Well, we always like to compare it to the S&P. If we bought this stock in 2021, that's all we have. So very little history to compare it to. Blue would be Flux. Red is the S&P. You can see the S&P, 10 grand would be worth 12. So you'd have made, in fact, 12.7. You can see here we'd have made money. Flux, your 10,000 would now be worth 1,900. You've lost nearly 80% of your money. Again, it's not a good metric when it's over such a short period of time. So, what is my thoughts on this? Well, I do like this sector. You might be better off, though, buying an ETF of this sector. There are plenty of ETFs that have a basket of battery or lithium type businesses. You might, because it's very easy for hard to pick the right one, whereas a basket of lithium funds would be perhaps wiser, because that way you're in the sector, except you're not limited to one company. My concern is the profitability was okay. The balance sheet was okay, but they haven't got much cash. They're going to probably need to dilute. They got a good potential growth though, but their solvency score is a bit low, but that's expected from a company like this. So it's a watch for me. It's not a buy. We've had a bit of a rally over the last few days. If we just look up now, we've had a bit of a pump this month, up 27%. A lot of stocks have rallied to the end of the year, now selling off. I don't think it's the right time to buy it for me. That's only my opinion. So there's my thoughts. It's a watch. I like it. I'll keep my eye on it. I'll be interested to see if they're going to dilute. I'll make friends at the company, start to find out what's going on a bit deeper. But for me, it's a watch, not a buy. Maybe put a marker share down to keep your eye on it. That's my thoughts. Anyway, if you'd like the link for Alpha Spread, I told you, you can get all the links and you get a free service if you use my link, or you can get a paid service. I do get a small referral if you do that, but you then get the full package. All below in the description. Over here, you'll see my full Alpha Spread list for all my stocks I review, and meet the CEO as well, where I get to talk to the CEOs of the company. That was a review for one of my members. You too can have your own review. Until next time, as always, take care of yourselves and each